Good afternoon. Thanks for joining us today. We have Treasury Metals presenting, which is really exciting because they just announced a financing this morning, or was it last night? Last night, I think.
Last night, yeah.
Anyway, so I have Greg Ferron, CEO, and Mark Wheeler, who is Director of Projects, presenting today. So as you know, this will contain forward-looking statements. If you don't know what those are, check them out on the company's disclosure on their website. And without further ado, I will turn it over to Greg and Mark. So thanks for joining me today, guys.
Yeah, thanks, Deb. Pleasure to be here. And I know we've been talking a little bit about Treasury shareholder base the last several months, and I had mentioned to you with this transaction with Treasury acquiring the Goldlund Gold Project, really made a lot of sense for us to start shifting our focus to marketing and adding to Canadian and U.S. shareholder base. We've got quite a large European following. So one reason why we're here today, to meet some of your clients and a new audience, which we're excited about. And Mark and I did a presentation, I guess, a few weeks ago, announcing the acquisition of Goldlund from First Mining. And at that time, I said I was thrilled because it created one of the largest development projects now in Canada. The timing's perfect with the gold price and with our federal EA completed. It's an ideal time to look at how we could integrate this much larger production profile moving forward. And, rarely in the mining sector do you see such strong synergies and benefits, being delivered to their shareholders. I'm even more thrilled today with the fact that we've now have that first important program fully funded. We just upsized the bought deal. There was good demand, and we cut back most of the orders. So we're thrilled about that. And the way I see things moving forward with Treasury Metals, the next year is going to be a huge value creating opportunity for our shareholders, and we'll explain why. And that funding is obviously important because that's going to allow that first phase of work to get done. And then I think when this project is, 6 months from completing its construction phase, that's probably the next time there'll be another significant opportunity like this to make money. So that's my introduction. And so I'm just going to jump into the presentation. I'll talk a bit about Treasury Metals, the Goliath Gold Project, and then we'll get into the acquisition, the benefits. And then my colleague Mark will walk you through the plan, the drill program, and the execution plan we have over the next year to integrate the two projects. And then we'll take some Q&A.
Perfect. And yeah, just as a reminder for those participating, if you want to put your questions in, there's a Q&A box at the bottom, and we will address them at the end. With that, yeah, I'm really excited to hear all about the acquisition.
Okay, great, thanks. And I should mention the reason why we have that logo with First Mining on is we've been doing some joint presentations as a result of the acquisition. So just by way of background, Treasury, many of you may have heard of it. We were developing the Goliath Gold Project in northwestern Ontario. We're listed on the Toronto Stock Exchange under the symbol TML. We bought the project from Teck several years ago. Since then, we've put about 40 million into the project through drill programs, metallurgy, engineering, permitting. It's got excellent infrastructure. There's a video on our website, and I encourage everyone to go have a look at that because it's rare that you have such infrastructure, and obviously that helps deliver strong economics and the ability to finance it. Last year, the federal government and the provincial government made a decision that gave us permission to build a mill and tailings facility at the Goliath site. That's obviously a significant accomplishment and not easy to do that day. And with that in place, we decided to then expedite getting our pre-fees done. So we've been doing a very significant drill program. And then the other thing we were moving along in the background was looking at some consolidation opportunities. Not just Goldlund, there were several interesting projects in the camp. We thought that just creating that scale and with the permit to mill, it made a lot of sense to look at adding additional resources. Just by way of background on the project itself, so it's an open pit that runs for 5 or 6 years. It produces about 2 grams. On average, there's only about 200,000 mineable ounces of the 500,000 in the resource because it is an underground mine. And then that cash flow will develop the underground, which is about a 5 gram underground. We've drilled down, it's quite shallow. We've only drilled down about 600 meters. There's a lot of potential to expand the zones at depth and along strike. And you can see the attractive economics of the project. It's about 130 million Canadian to build the mill and tailings facility. And then we've been working on our pre-feasibility with leading firms. And we slowed that down a touch the last few months to complete this acquisition. and then we'll walk you through what the plans are going forward in terms of the combined pre-feasibility now. So this gives you an idea. This really tells the story of why the acquisition was so important. You can see Goliath on that smaller image on the left-hand side. That's our property package, 50 square kilometers. It looks quite small, but that's a fairly good-sized project for northwestern Ontario. You can see we're right on the Trans-Canada Highway, so because of that, you've got rail, natural gas, power, highway access. There's a town nearby called Dryden. Sioux Lookout is not too far away in the town of Wabigoon. Lots of skilled labor available for the project. You won't need a camp, for example. And then we went and bought the Goldlund Project because obviously there's a lot of synergies. The projects are 2 kilometers apart. The resources are about 25 kilometers apart. It creates a much larger land package, over 330 square kilometers. So one of the largest land packages now in the district, over 3 million ounces combined. We'll now have 2 open pits and 1 underground feeding that mill. And you can see some of the other players in the district. There's 3 producing mines in our camp. Musselwhite, Red Lake, Rainy, and then the newest one that will be in production later this year, early next year, is Pure Gold. So that really tells the story right there. And with that acquisition, it gives us a lot of exploration potential in and around the Goldlund resource. They have another exciting discovery about 10 kilometers further along strike, which will probably be the 3rd open pit, or at least the easiest 3rd pit to add. But there is other potential on the Goliath project as well. So again, the synergies, 3 million ounces, 2 open pits, so much larger resource. We should have a much more enhanced mine life and production profile. We don't have the exact number of what we're targeting, but somewhere that 125, 150 per year, 150,000 ounces per year is where we're thinking a 5,000 ton per day mill with this grade could handle. A lot of operational synergies that we'll get into today. My colleague Mark will cover some of those as well, meaning in terms of using 1 mill, so trucking the ore from the Goliath project. And I should just note, as you move back on this previous slide, you can see there's a Highway 72. So there is the ability to truck the ore down Highway 72 and access the property right here in the top right-hand corner. We have staked the ground between the 2 projects now as well, so we can look at other ways of transporting the ore from Goldlund down to the Goliath mill. And then we think with this acquisition, it's going to increase our investor interest, larger institutions. We think it's much easier to project finance this project with its jurisdiction, with the permit, obviously with all the infrastructure and that in place, the grade of the projects, but now with a scale. We think this is going to move quite quickly through the last bit of feasibility and permitting work. So I think I've covered the benefits of Treasury shareholders, just why it's First Mining selling the project. A couple of reasons. They like the idea. They clearly see as becoming a large equity holder how this is going to get re-rated with that much larger production profile. And of course, with us having a permit, that's quite significant. I think they know what it takes to get a project in Canada permitted nowadays. So that really helps get their ore cash flowing much sooner than had they done it on their own. And then there were big cost savings as well, both to get both these projects to production decision stage. We're saving about $50 million between the 2 companies. And there's obviously a lot of economics of scale with a combined operation. So they're going to participate both through an equity interest and on the board, and then longer term through a royalty and production payments. So it was a great transaction for both sides. Synergies. We'll talk a bit about how we're going to use the 1 mill for the two projects. Lower cost and lower risk. We think that a large open pit is obviously going to bring lower operating costs than you would expect from an underground mine, and it helps just de-risk our underground mine. We don't need to push the underground beyond what it can handle. You'll be mining the best ore at the highest grade, and then you'll be able to continue blending it with the 2 open pits. So it's quite a good strategy. Permitting, we've got expertise in the area. You're dealing with a lot of the same First Nations groups, same government, same communities, same workforce. So there's a lot of synergies there. And then a lot of potential G&A savings as well. So the next slide here is this hub and spoke model that you probably heard about in Western Australia, at Timmins and Val-d'Or. It's not uncommon. Atlantic Gold was another company that recently was very successful integrating a similar type of strategy and then getting in production and then having a sale to an Australian company a few years ago for about $800 million. So we start with an open pit at Goliath. That's right at the hub, of course. And then we also have the underground, which is different than Atlantic Gold. They didn't have that advantage of having that higher grade underground ore right at the hub. And then the next largest resource of all the projects for both companies is the Goldlund. It's about a 2 gram, 1.7 million ounce resource. That's only 25 kilometers away. And then we believe there's other potential for things like Miller down the road. That's that new discovery further along strike at Goldlund, just up here on the right there. And then we think there's a lot of potential for another open pit on the Goliath project. So you can see how that will be sequenced into the production profile moving forward. So I talked about this at the introduction. You know, we do think our stock is fairly well priced at the moment, considering we were trading around $40 an ounce before the acquisition. We're now trading around low 30s. That's probably creeping closer up to 40s. With now you've got this much bigger resource, a much bigger production profile. So we think we will trade in line with our peers over the next year as we get out, market it, and get the combined economic study out to the market. So we're quite excited about that. The economics are probably 0.1, 0.15 PNAV, so a lot of upside there. And, you know, our peers are trading anywhere between, you know, $60 to $100 per ounce. So we think that trading at $30 an ounce with this infrastructure, with the permit, it's quite an attractive opportunity for shareholders. So just again, on the acquisition, we're going to issue them 130 million shares of Treasury. So it's a 43-57 split. They're also going to get some listed warrants. They're going to distribute those shares to their shareholders, which I'll cover a little bit later on. They're also going to retain a royalty on Goldlund, as you can see, with a buyback of half a percent for $5 million, and then a $5 million cash payment once it's in permitted, and we produce 300 tons of ore from Goldlund. They'll have 3 of 7 members on the board, and then the idea is in later this year, within 1 year, they have to distribute the shares to their existing shareholders. So there'll be a dividend paid to their shareholders. We wanted to give it a full year to allow enough time to get it marketed, you know, beef up the technical team, get that combined economic study out, and, you know, get the company property finance, and I think it'll be well received as their shareholders will have a benefit from a whole year of hearing about Treasury and the integration of Goldlund and the combined company, and then they'll distribute to their shares, and they can distribute all of them, or they can retain up to 19.9% and continue to be a cornerstone shareholder, and then their board positions is adjusted depending on the amount that they distribute. So we have 100 million market cap. We've got about half our stock in Europe, long-term family offices in Europe that have made money on other things we've been involved with. Extracted in New York is close to a 10% shareholder. And then today we've added a number of new, 10 to 15 new institutional investors. So this is the sort of the plan moving forward. The next 2 slides, sort of the timeline of what we're going to get done. And then how we're going to integrate the 2 things. So I'll hand that over to Mark in a moment, just to walk you through it quickly. So Goliath will continue to be put through pre-fees, project financing. The open pit will go into production in a couple of years, followed by the underground. Goldlund will run as a separate project through its baseline, its regulatory permitting phase, and then would eventually you construct their open pit a few years later after the Goliath project was in production. And then in the middle there, you see what we're going to do for the market is we're going to be doing combined economic studies and project financing on the basis of the 2 projects integrated. So with that, I'll pass it over to Mark Wheeler.
Perfect. Thanks, Greg. Yeah, I mean, that's a pretty good rundown of kind of how we plan to develop them. It should be noted that, you know, with Goliath, we've taken that quite a ways through the process. We do have a federal EA and a lot of the technical details needed to progress the project. But as Greg mentioned, we've, you know, been on the go slow on that, just such that we can, you know, potentially and now for sure integrate Goldlund into that. So, you know, we do have underground mining to a near PFS level that we're very happy with. Same with tailings. And we've got Ausenco starting to look at redesigning the plant and the infrastructure for processing facilities. So if we look at some of, you know, the synergies between the 2, certainly having one plant that can process both ores will be a massive benefit. preliminary studies on metallurgy all look like their ore will process in our flow sheet and infrastructure that we're planning. So that's very good news. Really, now we need to dig into a bit of the details, as to how they really blend together when we do have them together. So we're looking to do that, in the next couple months. But we do, anticipate seeing economies of scale, going from a 2,000 or 2,500 ton per day plant with a Goliath as a standalone up into 4,000 to the 5,000 ton per day range. We should see anywhere from, 30% worth of processing costs on a per ton basis reduction. And that doesn't take into any of the account of the additional capital costs that get saved, as we're not building a second mill at the Goldlund site. So looking at that, we see potential also to upgrade the ore at Goldlund. Send in a higher grade concentrate, in essence, from the mining side on Goldlund, either by resource work, looking to upgrade the resource, being a little bit more selective and high grading the open pit, at least for a first phase, or getting into some of the ore sorting technologies. There's a lot of development happening in that field these days, and there's a lot of operators that are actually coming around and seeing the computing process and the ability to really sort it coming into play as kind of computers get better. So we're pretty excited about those synergies. Along with G&A, and one engineering team running the two operations and accounting, and everything that comes along with that. And then, really importantly for Goliath, as Greg mentioned, it adds a lot of optionality to the Goliath project, as a whole, in that we have the ability now to really play around with how the pit gets mined, how fast and when that happens, and similarly with the underground, kind of how, we're very happy with the design, but if we can de-risk it by, dialing back the production rate, I think we'll see, a lot of consensus on the market that that's a very good thing as we really develop into production and ability to focus on underground ounces as opposed to really trying to feed the mill going forward. So, we're pretty excited to get in and, delve into the technical details and some of the trade-offs and really figure out how these two projects mesh together in a, cohesive basis. So, but in general, as Greg said, we're still starting with a Goliath open pit, that helping to fund both the underground capital development, and then as that open pit finishes, get into some form or fashion Goldlund, and having the combined operations go for anywhere from 15 or more years, which as a mine life is pretty appealing. Yeah. This slide, just to what we're looking to do. As we've just put them together, deal closes at some point in August. Getting into preliminary economic assessment of the two combined projects. Looking to have that done, early 2021, such that we can get out to the market some idea of how it's going to work. Along with that process, we're really continuing to drive Goliath ahead on a pre-feasibility basis, in that we're prepping and making sure that we've got sufficient information for all the provincial permitting that we're putting together now. So we do have enough baseline and all the work that we've done. So really just translating, any of the design tweaks back into those applications and have those ready to go by the end of the year, which puts us 12 months through 2021 worth of working back and forth with provincial regulators to get that done. And then into some sort of construction, final engineering and decision in 2022, putting us into 2023 for some sort of first production out of Goliath, being likely first out of the open pit. On the Goldlund side of things, we are on site right now, actually, moving ahead with some of the baseline work, trying to catch up as much as possible. So they are probably about 2 years delayed in terms of the baseline that they do have. So we're just taking the summer season and making sure, counting birds, that we don't lose a year on some of that work. So we are taking advantage of the season and getting moving as soon as possible. By the time Goliath is really finishing up the permitting process, we will have enough data, and certainly have enough technical data from the design to really put the Goldlund permits into play. And at that point, we're really just looking at an open pit, a waste facility or waste rock facility, and moving from there with, you know, road upgrades and simple things like that. So we do anticipate the permitting on Goldlund should be easier than what we've had to go through on Goliath itself. So, you know, and all through that process, really just kind of continuing to push them along in a phased approach. So we are very excited to get into that, and, you know, looking forward to the next 18 to 24 months worth of work, that's for sure.
Yeah, okay, so the financing today, as I mentioned, you know, is very important for funding that early, the 2020 work that's left, and then that first half of 21, and a lot of good information will come to the market, as Mark mentioned. First, there'll be an infill program to get some of the Goldlund inferred ounces in the M&I category. So we're already looking at that mine schedule review now. That'll bring Goldlund to a pre-feas level, like the Goliath project is. So that'll allow us to get that first combined feasibility out to the market next year. So because we don't have all of their ounces in a reserve state now, it'll be a combined PEA coming out. Ours will be done to a pre-feas level, as Mark mentioned, just to ensure that construction permitting can start. And then we'll be doing an expansion program. So that's the first order of business, as well as getting their permitting and baselines underway. And then, as Mark mentioned, that'll lead into the feasibility project financing of the open pit at Goliath. You know, one other thing we didn't touch on is the exploration potential. So why don't we just address a little bit about that? This is the C-Zone discovery we made this summer, and you can look in the spring and winter results we've had. We believe by expanding this underground area in the C-Zone, that's how you can increase the size of the underground production at Goliath. So that's one high priority area, and that's not quite deep. You're only talking about 200-300 meters below the open pit. And then along strike, as you can see, we've identified other potential open pits along strike through different methods like soil sampling and IP. So obviously you'd want to get out and drill some of those near surface targets, because that's within 10 kilometers of the proposed mill. And then on the on the Goldlund project, you know, we see the highest potential initially of expanding along strike in this resource area. Some of these other zones are still in the inferred category, so you're going to want to see if you can expand those zones along strike and convert them as well. So that's kind of the top area at Goldlund, followed by their new Miller discovery, which there's already a small resource now that just needs to be expanded, infilled, and then you'll have your third open pit potentially for production at Goliath. And then there's some other areas further south as well that are quite interesting at Goldlund. Then Goldlund also has a lot of underground production too, because it was in the 80s an underground producer. So that's something you'd look at as well going forward. But obviously we're going to focus now. The last several years of drilling has been focused on that open pit. So with that, why don't we take a break here and just wrap up the formal presentation, and we can start taking some questions from anyone about the acquisition or the financing and the plans moving forward.
Sure, yeah, there's a couple questions there, and I have some as well. Let's start with some of the audience questions. So what are you planning on doing with the non-core assets?
Yeah, good question. Where are the non-core assets? So, yeah, so the Gold Rock project is in the Gold Rock camp, which is south of us, and there's a lot of interesting projects in that camp. So we'll definitely keep that project. If we were to make another acquisition in the district, that is one area we'd be looking at. Shining Tree, we're actually in the process of selling that to Platinex. It's creating, and we're going to become an equity holder. We think that, you know, they're very undervalued. It's got some very interesting drill results on their Shining Tree project. So by consolidating it, we're creating the largest land package in that Shining Tree camp in Timmins. So that's going to be, we're going to complete that sale in the next few weeks. WeBG is already under a joint venture with a group in Toronto that's made a number of interesting discoveries at that project. It's quite further north, up by Musselwhite in Ontario. And Lara, we would look at divesting as well. So that's a quick overview.
Can you put the map up of the land package that you have and the other ones around? Because I have a couple questions about that. So just talk, yeah, that's perfect. So just talking about where you're located, it's fantastic real estate. I think we were talking a week and a half ago about you're trying to consolidate a new region, a new play that you think could be a mining camp. What else are you looking at in the area? Can you talk about what your acquisition plans going forward are? Or are you just very much focused on Goldlund?
Yeah, well, right now it's important that we integrate these two projects and get that combined economic study out to show the market, how robust the two open pits in the underground will be. And then we get that permitting for them moved along, as Mark talked about, and then get this in construction. That's going to be the focus. But we have been told by mid-tiers from Australia and Canada, the idea of having a big land package obviously increases their overall potential for discoveries down the road. So that's one of the key reasons for doing the acquisition. So there is an extension to Goldlund owned by called Black Lake, owned by Group 10. That obviously makes a lot of sense. You just further expand the potential of that greenstone belt. And then in the southern part of us, Teck owns a very interesting project down in Thunder in the Gold Rock camp. So that's something else we would look at. But it's got to be obviously within trucking distance of the mill. So you're kind of limited to maybe about 50 kilometers radius. And then you've also got Kinross out here drilling 10 kilometers away, a new project called Van Horn. So that's obviously of interest what they're doing there.
Okay. And we had a couple of people join the call a little bit late, so sorry to be repetitive, Greg, but can you run through the main points for the acquisition in terms of the synergies that you see and the reasons that it makes a lot of sense for Treasury?
Yeah, sure. Yeah, so the big synergies is just the benefit of having that bigger production profile, longer mine life, higher throughput per year, and then more open pit ounces, which is over 2 grams. So so there's the cost savings, there's the de-risking of the Goliath underground, better chances for discoveries along that big strike length, and then obviously there's a lot of G&A savings in terms of using the same team, the same mill, it's the same local communities, same First Nations, same regulators we need to work with, and take care of the environment, and then employment as well. So it's going to be the same community. So those are some of the big synergies between the projects. Obviously, the biggest one is the capital we're saving up front is about $50 million, and then only having to build one mill. That's for 5,000 tons per day. As Mark talked about that, there is some economics of scale benefits, lower costs, and then that shift to open pit. I mean, that's a few of the big synergies.
And with this acquisition, you've obviously appealed to a larger shareholder base. Can you talk a little bit about some of the funds that got involved in the deal? Obviously, you can't name them, but can you kind of tell us how this financing has shifted the demographics of your shareholder base, or can you kind of tell us what was retail versus institutional percentage-wise?
Yeah, we already noticed. I mean, Mark and I, one good thing about this acquisition is and working with First Mining, we're exposed to a number of institutions, probably too small for the company previously. So we not only did we get another 15, 20 new institutions into the share register in today's financing, but we got to meet a lot of new investors in the last 2 to 3 weeks. So we're quite excited about that. Yeah, and we're already seeing a number of, 100, 200 million type funds under asset management size funds now, shareholders of us that are new. So we're a number that are tend to be, your next lead order in your next financing, and they're there from now through the construction phase and into production. So we picked up a few like that as well, which is very important going forward. And I'd say the retail component, there was still about a third, 25% to a third went to retail as well, which is obviously important.
And would you categorize the institutional investors that played on this financing as mining-focused funds, or are you starting to see generalists come in?
With a company like Treasury, you're probably going to see more generalists. I would expect as this starts getting re-rated properly when the combined economic study's out. But so they were mainly, fairly experienced gold funds. There was a few generalists in there as well. Yeah, so a nice mix. But still, I'd say the more mining gold focused funds.
And how have you found it
in America.
doing a deal in this environment? Have you found it challenging in terms of doing meetings remotely, getting things across the line?
Well, it was a lot of work getting the acquisition and financing done, just with everything going on with COVID-19, and doing a lot of Zoom calls with First Mining and our advisors and board. But yeah, it went quite well. And now, as Mark alluded to, this acquisition was so material, and there's so many synergies. You really need to get the project acquisition done. So the work's been kind of quiet at the project, but now we can really accelerate quickly, moving things forward with the drill program, the new economic study, the permitting of Goldlund. So we're going to be able to move very quickly on the work there, partly because our project is so advanced, and we're really, we're almost at that construction decision stage with just Goliath, so we can integrate this project quite quickly.
Okay, and then can you give us some upcoming catalysts and timelines?
Yeah, okay, so, well, the first one's going to be that combined economic study. We're already working on that combined resource and mine schedule. That'll help give us a good idea of the size of the reserve for that economic study, and then also, more importantly, where additional infill drilling should occur and the expansion drilling as well. So then we'll begin about a 3 to 5 million drill program is going to start almost immediately. They're actually drilling at Goldlund right now, First Mining, so we'll take over that program and continue drilling at Goldlund. Later next year, you begin drilling at Goliath. So then you'll have that come out, and then you'll have a very clear development plan come out once this closes on how we're going to integrate the baselines and permitting of the two projects, because they are going to continue separately as mentioned, but with the idea of using one mill.
Okay. And you haven't seen any slowdowns for drilling or lab turnaround from COVID?
Well, drilling is completely stopped in Ontario, for several months, but I know it's now just started back up the last few weeks. As mentioned, Goldlund is getting drilled right now. So yeah, no, things seem to be picking up. I don't know, Mark, do you got any thoughts on what you're seeing in operations in North?
Yeah, I think mostly everything's starting to come back online. Certainly, as it all kind of really went south in March, the labs and assay kind of stuff was pretty slowed down, but kind of all the consultants and everyone that does work for us now is all chomping at the bit. Everyone's ready to go, and most of that stuff has been released, and it's pretty easy to maintain social distancing and keep safe while doing it. So yeah, I think everyone's kind of raring to go and get into it.
Yeah, I think a lot of companies are seeing that sort of boomerang effect where things were slower for a little bit, but now there's incentive to kind of get things going. And I think that the government's going to throw a lot of stimulus out there. And I think permitting timelines you should see kind of sped up a little bit, I hope.
Yeah, no, it's true. I mean, there's going to be a real need to get more jobs and more of these projects permitted.
Sure.
I mean, on the investor side, the stock has traded very well the last 6 months. So, we're still doing our best to communicate with shareholders, and it continues to trade better month by month.
Yeah, well, the chart looks fantastic, actually.
Yeah, and the chart looks great, and now we're financed, and so we're very excited now to get the next bit of news flow out on the integration plan, and get the drills going at Goliath and Goldlund. Mm-hmm.
So with the money that you raised, you've already sort of told us what it's earmarked for. How long will that take you through till?
It'll get us into middle of next year. So we'll go back to the market, for two reasons. One, if the timing's right and the stock's trading at a proper valuation, I think it makes a lot of sense to get funding for expansion drilling. So that's a whole nother part of the story, is you want to execute this to a construction decision, like they did at Atlantic Gold, very well. But you also want to be showing the market and just the sector, the mid-tiers, that the project can get a lot bigger. So that would be the next round of funding, would be for that expansion drilling. And then feasibility, and then to be in a position to make a project financing decision.
And do you think that you want to build the project? Are you potentially looking to partner or exit at some point?
It's hard to say. Obviously, what shareholders want to do is what's important. I think my personal view is that these projects are probably better to be put into construction and operations with a balance sheet like a mid-tier has. They've got the team, they can execute, they can project finance it internally. But, it's been proven, like someone like Pure Gold, for example, who you can take these single assets through. If you're in a good jurisdiction like Ontario and you've got the permit and you've got the community support, there's nothing stopping from enhancing the executive team to add more mine building operational experience. And people are going to want to work for a company like this because, it's got the infrastructure, it's got a great location, lots of good places to live and near the projects. So I think we'll definitely move ahead.
Yeah, well,
under both scenarios, right?
I love Pure Gold, but they're not in construction yet, and I think that they're still potentially in play before that happens. When you look at Canadian assets, like really good quality Canadian assets, they rarely get into production without being bought.
Yeah, so you're right. So once they have a year under their belt of operational experience, they could be acquired. Very similar to Atlantic Gold, I guess, right?
Yeah, very similar. Or I could probably name a dozen different Canadian companies that have been bought as single asset, either close to production or just in production in the first year. Talking about Pure Gold, they're not that far from you. Would you potentially look at somebody like them as potential acquirer, or who do you think eventually gets involved in the project? I know it's hard to speculate.
Yeah, it's hard to say. Well, I mean, I do know that we both had a lot of the mid-tiers and smaller producers to the project. And in many cases, some of them have been to both. So people have been trying to get this together, but they didn't want to do it. A producer's not going to they wanted us to get it done. So something could happen fairly quickly. Or they could, let us execute for a year, let us show that we can expand the resource, and then something may happen. But just in the district, New Gold, I mean, they seem to have a new strategy. Maybe they're going to want to focus on northwestern Ontario now that they've sort of, picked the assets they want to advance and ones that they wanted to sell. You've got Kinross right here, so they're obviously a logical person interested in the district. But yeah, with over 3 million ounces in the permit, I think there's going to be a number of Australians as well would be interested. And who knows, someone like Pure Gold may want to look at expanding as well if they decide not to sell their company.
Yeah. So I'm not that, obviously I know New Gold, but I don't follow it that closely. I remember the Rainy River transaction that happened, 7 years ago, something like that?
Yeah.
What is their new strategy?
I'm not an expert on it, so I don't want to say too much about what they're doing operationally at Rainy. Mark may have more comments than me. I don't know how they're been able to turn that operation around. But I've just been seeing they announced was it Blackwater? They just announced a sale this week, and they sold an asset I think in Nevada as well, or California. So it looks like they're trying to clean up their balance sheet. So you never know; they could begin looking at other things in Ontario as a growth strategy.
Interesting. And I had another audience question. I don't know how much detail you could go into. Probably very little. But are there any majors currently looking at the story? You probably can't tell us if you have seen.
Yeah, I can't really say. Well, all I can say about that is there's been a lot of people waiting for us to consolidate these two projects. So because it was just so obvious that it had to happen. Because 1.5 to 2 million ounces each is interesting, but putting them together obviously makes a completely different story. And the fact they were 2 kilometers apart made a lot of sense. So a lot of people have been waiting for this consolidation to happen. So I think we'll now start 6 to 12 months would make a lot of sense to start getting mid-tiers up to the project for site visits and that type of thing.
When do you think you could run your first site visit? I've noticed that a few have happened over the last week or two.
Yeah, for investors, that's something. Well, that's a good point. It's something we'll have to do fairly soon, I guess, with the season. It's a good opportunity in the fall to probably get a group up and see the combined projects. A number of analysts have been up to First Mining's covered by 4 or 5 firms. So I know they've had several analysts up to their project. We're covered by PI and Haywood, and hopefully that list will expand with the combined project. So definitely need to start doing a site visit. It's very easy to see. I mean, fly into Dryden, you can fly into Thunder Bay. It's a 3.5 hour drive from either Thunder Bay or Winnipeg.
Mm-hmm.
So it's very accessible.
You had a fairly robust syndicate, so hopefully you get a little bit more coverage.
Yeah, I hope so. Yeah.
Anyway, I don't see any more questions coming in from the audience. Mark, Greg, have I missed anything? Is there anything else that you wanted to drive home as final points?
I don't think so. Mark, anything else you want to cover?
No, I think that's just about it. Appreciate everyone's time today.
Yeah, I appreciate you taking the time to talk to us about this. I think it's really interesting. I really like Canadian assets. Safe jurisdiction. The currency right now is extremely helpful.
True. Yeah.
And I mean, the world's a crazy place right now. You don't know what's going to happen in a lot of other areas, and COVID's just not even hit its apex in a lot of different countries, and feels like Canada, we're kind of on the downswing. So I think it's a great area to be investing in, and I like gold right now. I think we're in the middle, the start of a long, maybe 3-year bull market for gold, and I think that being in Canada is a great place to be. So congratulations on the acquisition and the financing to go with it. Yeah, it's really cool. I think there's a lot of room for the stock to move and for you guys to expand the projects that you have and other potential acquisitions in the area. So thanks. Excited.
All right, thanks.
Treasury.
I agree with all those points. It makes a lot of sense. We're definitely in a very, very good gold market. So thanks again, and have a great evening, everybody.